Hello, everybody. Welcome back to another episode of the Market Close. It is Friday, May 30th. We are early. I said, you know what? It's Friday. We might as well go early. So we're 4 minutes early. And boy, oh boy, has some stuff happened over the past 24 hours, or really over the past 4 hours, since we had the market open. We have a bunch of different headlines. Palantir right here trying to get some momentum. Back at 128, Palantir fell all the way down to 124 after we topped out at around 131.53 in the morning. NVIDIA went all the way down to 133, actually 132.92. I did buy some NVIDIA, so we'll talk about that in a second. Hoodie went down to 63.50. Now it's at 64.93. Tesla, 351. That's actually down 2% on the day. The entire market itself trying to get that green close. S&P 0.09% away from closing green on the month. The S&P was down 1.2% at one point today, based on the news that we're about to talk about. It looks like we're getting a little bit of a recovery, and what it's showing right here is that there truly is some resilience in this market for the news that we got to not really have that much of an impact as we get into the end of the day. So here's the news. We got some new tariffs on China. This is what shocked the markets a couple of hours ago, but it looks like maybe in the next 20 minutes, we end up closing green.
That's right. So first, that headline that hit midday was coming from Bloomberg News. They were reporting that the Trump administration is considering expanding restrictions on China's tech sector by trying to capture some subsidiaries of already sanctioned Chinese companies. So the idea here is if you take a company like Huawei that's already subject to U.S. restrictions, if Huawei became the majority owner in some sort of subsidiary, all of those subsidiary companies would also be caught up in the same restrictions. Now, Bloomberg is reporting this. I asked the White House about this and officially got a no comment from them, but it simply added to some of the tensions we were hearing about between the U.S. and China this morning, including the president accusing China of violating the trade truce that they just struck a few weeks back in Geneva. Nothing looked good by midday, Scott, but just a few minutes ago when we heard the president speaking in the Oval Office, when he spoke about China, it wasn't too aggressively. He said, again, they did violate a big part of the agreement, but he went on to say that he's sure that he'll speak with President Xi and, quote, hopefully will work that out. So reading between the lines there, no call scheduled between the presidents at this point, but President Trump expressing some optimism that it will happen, even though, as you remember, Scott, we have been waiting for some sort of conversation between those two leaders since the start of this term. It hasn't happened yet that we know of, but now that might be the best next step in order to get these trade talks back on board.
All right, good stuff. Megan, thanks so much for starting us off.
So that was kind of the core headline today. The United States is planning on wider China tech sanctions with a crackdown on different subsidiaries. This is what got NVIDIA to go down to about 133. This is what took the S&P 500 down about 1%. They took Robinhood down to 63. It took Palantir down to 124 after Palantir was at 131 in the morning. We'll talk more about what happened with Palantir today. But it was a headline that I guess has some merit. And Trump tweeted this morning about China in a more aggressive way. He was getting annoyed at China. So that, kind of carrying on with what he said led to some of the pain. On top of that, you got the Wall Street Journal that just reported about 5 minutes before I went live that the China-U.S. trade deal might be on pause due to rare earth export approvals, jeopardizing everything they talked about in Geneva. The U.S. says China broke its word. Beijing says the U.S. chip sanctions triggered the slowdown. Trump says he'll call Xi to work it out. So you had a bunch of different things happen today in regards to specifically the United States and China, whether it's this rare earth mineral stuff, whether it's the Trump tweet, or whether it's the wider U.S. tech sanctions that were reportedly proposed to be imposed on China just a couple hours ago. And all of that led to markets going down. But markets do not care. I mean, the S&P 500, again, trying to go green for the end of May. If we do go green right here, we will have a 7% or about a 6.5% month on the S&P 500, which is a hell of a month in May. It's one of the best months in 35 years. Now, I did buy the dip. I know I said I was waiting for NVIDIA to go down below 130 to buy the dip, but I mean, at some point it was down almost 5%. I said, you know what, I'm going to buy this dip. So I bought 15 shares. I think I bought another 15 shares at around 134. So I bought 30 shares today. I almost nailed the bottom. The exact bottom was 132.93. I got 133.03. But yeah, I bought the dip. It was a good quarter. It was not one of those quarters to be afraid about. And if they were going to take this thing down 5% off of some China headline, when the China news is more than priced into an NVIDIA, I mean, like, we know that their guidance and their margins got hit specifically because of China. So that can't be something surprising to the market. Then For me, it was not the craziest thing to buy the dip. So that's what we got in the context of China. Now, Jamie Dimon also said some stuff that was not the best. This was in addition to the market really fell because of the China stuff, but what Jamie Dimon said was not a good thing either. So he said three things. He said, number one, the Fed is right to wait on cutting rates. So he's happy that the Fed is not cutting rates. Number two, he says you're going to see a crack in the bond market. It is going to happen. And then three, he says we will not panic when the bond market breaks. We'll probably make a lot of money. We meaning JP Morgan. So you got Jamie Dimon, basically, who's, again, CEO of JP Morgan, saying that there is going to be a crack in the bond market. And then you had all this China Trump stuff that kind of accelerated the sell-off that we had intraday. Again, that sell-off lasted for like maybe an hour, and then the dip got bought up, which, again, shows the resiliency of this market. Now, my take on Jamie Dimon's comments is that Jamie Dimon has been a bear for the past 3 years. So it's hard to take him super serious because when he tends to be bearish, the world tends to spin. You tend to breathe oxygen. Like Jamie Dimon he's always bearish. So like, it's not really that his comments are saying are pointing to anything unique, but I think it did accelerate some of the downside pressure on the broader markets. And, it was there for about an hour. And if you bought the dip, you bought the dip, but we are starting to recover as we get towards the end of the day. That's also probably the reason why NVIDIA got hit. Again, those China restrictions, they're not specific to NVIDIA, but if we're having more sanctions on subsidiaries inside of NVIDIA, those laws and those new sanctions, Bloomberg reported could be unveiled as soon as June. So in the next few weeks, that could be a reason why NVIDIA's export controls get hit even more. But again, I just feel like a lot of that's priced in. And I think we've, had that for a while. Palantir, we'll talk about Palantir, and then we will get into Elon and Trump in the White House. So Palantir's at $128, up about 4.85%. Even Palantir fell when that China news came out. Why is Palantir up? I think, and my opinion hasn't changed from this morning, the New York Times tried to put out a hit piece on Palantir, and the headline that all the business articles and business accounts kind of quoted from New York Times is that Palantir is bringing in over $1 billion of government contracts from Trump, the Trump administration. And so the New York Times kind of painted it as, hey, Trump and Palantir are getting too friendly. And the investor class took that and said, oh, really? Cool. I'm buying more Palantir. And so as a result, Palantir is up 5%. At one point, it was $2 away, even less than that, about $1.50 away from breaking all-time highs today in the morning. We got to 131.50. It looks like we're going to close the day at hopefully above 128, if not above 127.50. So not a bad day for Palantir. And then HIMS as well. Great intraday move for this bad boy. 9%. Strong momentum on HIMS, 57.07, up about 467 on the day. So HIMS, Palantir, big movers. Tesla's been relatively flat, down about 2% on the day. Robinhood back to 65. We talked about that big news on Robinhood the morning. If you missed it, Robinhood Strategies, which is the sort of AI advisory platform of the company, launched in April. 2 months later, 250 million AUM, 75,000 funded accounts. I am one of those accounts. I put $1,000 into Strategies, so I'm part of that 250 million. They charge 0.25% as a management fee, capped at $250. So whether you're managing $100 million or $100,000, it's the same $250. And the rate of growth is just incredible, dude. I mean, this is going to be another 9-figure business for Robinhood, probably in the next year and a half. And the fact that they were able to allocate $250 million with 75,000 accounts in less than 2 months of launching the product, to me, is just insane. And so some really, really good growth in the context of Robinhood. And that's what we had today. All right, let's talk about Elon. Let's talk about Elon and Trump. So Elon and Trump, they had their final press conference. Trump gave us a lot of quotes, said a lot of things, but here are some highlights of what Trump said about Elon.
Comparison in modern history, is already running one of the most innovative car companies in the world. You look at his factories and compare them with some of the old factories we have, and it's a big difference. And the most successful space company, and I guess in history, you would have to say the largest free speech platform on the internet, et cetera. Yet Elon willingly, with all of the success, he willingly accepted the outrageous abuse and slander and lies and attacks because he does love our country. I know that very much. He loves our country.
Wait a second. Hold on, guys. I'll get back to this. What the heck is going on, bro? Why did Robinhood just gap up 3%? Holy crap. And Palantir, what? My goodness, bro. What is happening? We got 10 minutes into the close. 130.22 on Palantir. That's up 6.4. Hoodie 65.77. Where's the S&P? Are we green yet on the S&P? Do we go green? We went green, folks. We went green. We went green. Let's see if we can hold on. It's green by like 5 cents, but I think the market wants to end green for May. It feels like it has an inclination that it wants to. Tessie, though, what is going on here? Tessie down 3, Robinhood Palantir up 4, S&P slightly flat. It's not S&P inclusion. That's next week. So we're not going to find out about that for a while. It could be, yes, end of month rebalancing across a lot of ETFs and funds. That could definitely be happening. So people's funds could be selling Tesla, buying Palantir, selling Tesla, buying Hood, any of this stuff going on, selling, maybe Amazon, buying Google. So there's a lot of different stuff that could be happening in these last 10 minutes, but that is pretty dramatic. Tesla right here, gapping all the way down 347. NVIDIA basically flat at 135. Hoodie, you see that green candle right there, dude. It was at it was at 64.94. It gapped up basically $1. And then Palantir has a little bit of red candle, but it was at 130. 350 market buys. Yeah, that could also be happening. Maybe it leaked. It wouldn't leak a week early. The S&P inclusion stuff leaks like the day of in the morning. That's what I remember with Palantir. Like Palantir started gapping up at like 2 o'clock the day of the announcement. So it wouldn't leak a week early, but it feels a little bit more like rebalancing. I don't see any news on my side. If I see any news, I'll let you guys know, but don't see that right here. Here's Trump and Elon. We'll go back to that, and then we'll keep going from there.
For another country that's going through trials and tribulations, I would say. But he's all about the USA, and Americans owe him a great debt of gratitude. So I just want to thank Elon for his time as a special government employee. Can you imagine? They call him an employee, but it's a special government employee.
And this is what Elon had to say.
Well, let me say perhaps a few words. That this is not the end of Doge, but really the beginning. My time as a special government employee necessarily had to end. It was a limited time thing. It's 134 days, I believe, which ends in a few days. So that it comes with a time limit. But the Doge team will only grow stronger over time. The Doge influence will only grow stronger. I liken it to sort of Buddhism. It's like a way of life. So it is permeating throughout the government. And I'm confident that over time we'll see $1 trillion of savings and a reduction in $1 trillion of waste and fraud reduction. The calculations of the Doge team thus far, in terms of an FY25 to FY26 delta, are over 160 billion, and that's climbing. We expect that number will probably go over 200 billion soon. So I think the Doge team is doing an incredible job. They're going to continue doing an incredible job, and I'll continue to be visiting here and be a friend and advisor to the president. And I look forward to times being back in this amazing room. By the way, isn't this incredible? Look at this incredible. It's stunning. I think.
Okay, for all of you guys wondering why Elon has a black eye, here is what he said. Oh, the audio on that sucks. Let me get a better video. Basically, his son punched him in the face. So that's why he has a black eye. I don't have the exact video right here, but here's the quote. So again, this is his eye. You guys can probably already tell. He said, in the Oval Office, the bruise is coming from horsing around with his son. I said, go ahead and punch me in the face. And he did. It turns out a 5-year-old punching you in the face actually does damage. I was horsing around with my kids. So for those wondering why he got the black eye, that's why. But essentially, again, Elon basically saying, hey, my time at Doge is not ending, or sorry, my time as a government special employee is ending, but Doge is just beginning. And he says, I'm confident we will eventually get to 1 trillion in reductions. And I look forward to continue being a friend and advisor to the president. So there you go. Elon continuing to say, hey, there was a very amicable press conference, and Elon basically saying, we will find a way to navigate this over the long term. It's just he won't be there on the day-to-day as a special government employee. My goodness, Robinhood, bro. 66.32. I did buy another 100 shares of Robinhood today. I know I'm buying it like every other day in the 60s, but I bought it at 64. Sorry, not 100 shares, 50 shares. But at 64.79. I mean, I thought that was the dip when that whole China thing came out. And then it went down to like 63.50 after like the extent of the Jamie Dimon comments came. But I continue to believe that in the 60s, it's not crazy. Not only can I write calls against it, but I also do believe with S&P inclusion coming up and Q2 being as strong as it's been so far. I know we got another month left, but April and May have been incredible. And then you see the strategies growth and you're like, holy, like that's real growth. The strategies growth that Vlad talked about today, 250 million AUM, 75,000 customers in less than 2 months of launch. When you talk about investing in a growth company, a growth stock, That is growth. Brad Gerstner, by the way, commented underneath that post. He was super excited. This is why Brad Gerstner invested in Robinhood, because he sees them as a tech company that can freaking grow. And that's why they're getting the tech multiple that they're getting. And that's why I'm not that scared of buying in this $60 range. And we're seeing that momentum. 66.24. Wow, Palantir 131.44. Holy moly. Holy freaking crap, dude. Not bad, huh? Not bad. 131.59 on Palantir. Dude, are we about to go for 132? Let me open a Webull. Are we about to go for 131.52? Let's see. Dude, 131 set. Hold on, let me check resistance. We have 3 minutes left until we get to the close. 132 is, it's not a lot of, it's dude, this is a crazy right at the close. 40,000 shares? Yeah, about 40,000. Happy Friday, right, dude? Happy hell of a Friday, dude. Holy crap. It actually makes sense, though, because the only reason we lost those gains in the morning was because of this China stuff. But if the China stuff is gone, or not gone, but if the market kind of just doesn't care about it as much, then there you go. Not the worst thing in the world for Palantir. Dude, that's kind of wild, bro. That's got the freaking shares I bought before earnings are still green. You know, those shares at 125. Like, this is incredible. Absolutely incredible right here on Palantir, 131.50. Hard to end May better than this. Yeah, I would agree. Tesla, where is Tessie? Tessie right here at 347. It really does feel like a little bit of rebalancing. And as a result of that rebalancing, maybe that's why we're getting some of this kind of momentum on something like a Palantir. But it's also nice to see, dude. It's also really, really, really nice to see that it's actually getting there. 346 right here on Palantir currently right now. 346 on Tesla. Where is Palantir? Palantir, we got 2 minutes left into the close. Palantir 131.70. Dude, I think it's going to go for it. I think there's a shot. Let me check resistance again. 2 minutes, folks. Do you think we get it? 132 resistance is, sorry, never mind. I mean, look at all these green candles or all these green orders on Webull. You can see it. 142,000 shares are the resistance. If we actually, in the next 40 seconds, get to 132, that would be insane. But even if we don't, dude, 131.7 looks like there's a shot we close above 131, and then the after hours. We'll see what happens. And then Robinhood as well, moving with it. My freaking goodness, Hoodie, having some fun. 66.14. Holy crap, dude. Oh my gosh. This is a fun Friday, bro. This is one of those Fridays. This is a fun one. All right, guys, we're going to ring the bell as we get into the close. We are going to ring the bell as we get into the close. And what a close it is going. Do we get it? We got 10 cents away from 132. Do we get it? All right, here we go. 3, 2, 1. Ladies and gentlemen, the month of May is now over. The stock market is now closed. We got to keep ringing the bell. All right. Now the markets are closed. 131.50 on Palantir. We closed officially at 131.91. We closed officially at 131.91. You see that little bit of a red candle as we get into the very end of the day. But still, we were 9 cents away from 132. Robinhood closed right now. It's at 66. Robinhood closed at 66.15. A little bit of a red candle right there. Tessie got hit at the end of the day, down about 3.2%, 346. NVIDIA basically flat throughout the day. It was at 132 at one point, 135, so it recovered a little bit, down about 3% on the day still. Palantir 131.40. I mean, folks, we got about 4 more hours in the after hours, so we're going to see. We're going to see how this one plays out. Google right here, 171.83. SoFi 13.33. Meta 6.47 on the day. CRM 2.65. We'll have Steve on in about 15 minutes, and he'll talk a lot more about Salesforce and a bunch of other topics that we got lined up. AMD right here, down about 2% on the day. Apple was actually green. SMCI. Oh, S&P. Did we go green on the S&P? Did we? No. Wait, hold on. Did we? S&P, we ended 589.26. We ended on the S&P. 589.26. So, I mean, basically it ended green, but like it was 0.2% away. So now the S&P 500 for the month, folks, 6.28%. That means if you just own the market, up 6.28%, not too bad on the stock market in the month of May. Not bad. Not bad at all. Can you explain why it went from 131 to 122 and then almost to 132? So it went to 131 in the morning because of the New York Times headlines, in my opinion. Went to 122 because of the new China tariffs that we talked about in the beginning of the show. And then at the end of the day, going back to 132, I don't know, other than rebalancing is my guess. Funds had to rebalance. That's my best guess. Maybe there's some other reason. Maybe the China stuff didn't matter that much as we got to the end of the day because the broader market recovered from it, which again goes to the point that like nothing is really hurting this market. And it's scary to say that because you always want to be cautious, but like we've had, example after example. For those that missed it, the United States is planning wider China tech sanctions with a crackdown on different subsidiaries. This is why NVIDIA got hit to 132. I did buy the dip at 133.03 and then again at 134. But this took the S&P 500 down 1% throughout the day. Moody's didn't do it. The 20-year bond auction didn't do it. This new China tariff stuff didn't do it. The European 50% tariffs didn't do it. I mean, this is just a resilient freaking market. And the bulls right now are having some momentum. What do you mean by rebalancing? So it's the end of the month. So you have a lot of funds, a lot of ETFs that have to sell certain positions, buy certain positions. So for example, if you bought Tesla at like 270 at the beginning of the month and you're a large money manager, you have to rebalance, right? Because every month you have different benchmarks and allocations that you have to particularly keep your fund assimilated to. I mean, some funds have different requirements, but like Kathy, a lot of times the reason she sells Tesla is because she has an ETF and it can't be a certain percentage of the portfolio. But at the end of the month, you have to email all your clients, give them all your benchmarks, and that means you might have to make some changes. And some of those changes happen towards the end of the day. And so maybe that's why we saw some of that selling pressure on Tesla right at the end of the day. I don't think there was any headline that caused that 350 to 347 drop. And also maybe that's why people bought Palantir towards the end of the month. They want to sort of allocate to AI software over just, owning Walmart or Costco or something, right? So there could be a variety of reasons why we saw all this fund repositioning. But nonetheless, it definitely helped Palantir today. Also, HIMS, great day, up 8%, helped HIMS as well. S&P 500, again, basically flat on the day. The VIX below 20, which is very nice to see. That's down about 2%. TLT was basically flat on the day. Nubank just above $12. And then you got Tessie at 347. Robinhood still going after hours, 66.20 on Robinhood. The best May in the last 20 years. The best May in the last 20 years. That is correct. Okay, I think we should have Steve on in just a little bit. We got a lot to talk about with Mr. Steve, so we will have him on. And then we'll keep going from there. All right, year to dates. If you want to do it, put it in the chat. We are officially 5 months done with the year. We are entering into the 6th month, which is going to be June. And so you guys can put your year to dates in there if you'd like. We did it in the morning. Mine's really hasn't changed, basically 27, 28%. Palantir definitely helping as we get towards the end of the day. But man, dude, that was a hell of a run, dude. Last 10 minutes, too. It wasn't even like the last hours. Last 10 minutes, 3:52 p.m. it started. And we just gapped up on both Palantir and Hoodie. I see most people saying about 20%. Yeah, most people saying about 20%. Again, same thing as the morning. Same thing as morning. Some people more in that 40, 50% range. Some of you guys negative, but very small negative. Maybe you're a little bit heavy Tesla. That's why you're negative. But most people pretty green. Kane's up 71%. Brandon's up 53%. Ian's up 86% year over year. That's incredible. Or since April 6th. That's even better. That's 2 months. Not bad. Break even, but was down 35%. Hey, that's a win, bro. That's a win. In this market, it's about surviving. And even being break even after the tough April that we had. Not too bad at all. 4%, 5%, 51%, 7.6%. Yeah, most people around that 20% range. Dude, exciting freaking month as we end out the 2nd month of Q2. And we officially are going to be in the last month in June. And then we get to Q3. So a couple more clips from Elon and Trump. Here's one thing that Elon had to say about the New York Times today.
The president mentioned that you had to deal with all the slings and arrows during your time at Doge. There's this.
Well, some of the people, some of the media organizations in this room were the slingers.
Well, there is a New York Times report today that accuses you of blurring the line between.
Is the New York Times, is that the same publication that got a Pulitzer Prize for false reporting on the Russiagate? Is it the same organization?
I got to check my Pulitzer. My Pulitzer counter.
It is.
I think the judge just ruled against the New York Times for their lies about the Russiagate hoax, and that they might have to give back that Pulitzer Prize. That New York Times. Let's move on.
The president mentioned that you had to deal with.
Elon did not care today. Elon was like, you know what? You're going to keep asking me about legacy media. Then we're going to treat legacy media the way that people think that we need to treat legacy media. So I believe that was a question about drug use, if I'm not wrong. And Elon, obviously, very sensitive topic, kind of gets pissed off when people ask him about drugs and ketamine and all that stuff. So, yeah, I mean, he basically said, screw you guys. We're not going to talk about that. But that was one of the things that happened in the Oval Office. Then we got some other questions towards Trump around tariffs and China. So let me just show you guys a couple of those. Well, first, let's do this on the big, beautiful bill. And then we'll talk about the appeals court and Trump's reaction to basically his tariffs getting appealed and then repealed at the same time.
The bill is a great bill. It's going to be jiggered around a little bit. It's going to be negotiated with the Senate, with the House. But the end result is it extends the Trump tax cuts. If it doesn't get approved, you'll have a 68% tax increase. You're going to go up 68%. That's a number that nobody's ever heard of before. You'll have a massive tax increase. If it does get approved, you'll have a large tax cut, the largest we've ever had. When you add the past tax cuts that we got you, the Trump tax, they call them the Trump tax cuts. It's an amazing bill. It does amazing things. With all of that, it's going to be adjusted a little bit over the next coming weeks, and I think it's going to be passed. The Republicans want to pass it. The bill is a great bill.
Okay, and then this is what he said about the tariffs with the appeals court.
I mean, I'm so honored that we got that ridiculous stay lifted, because that would have taken away presidential power. It would have taken away everything that was granted by the founders. It would have been a terrible thing. And it would have, most importantly, would have left us vulnerable. We have a lot of countries that use tariffs on us and use them viciously, actually, viciously. And if we didn't have the power to use tariffs on them, and instantly, not when you go back to Congress and try and get hundreds of people to agree on something, that would take months to get just one simple proclamation. If we didn't have the power to counteract their powers, you wouldn't have a country left. We have to act fast. We have to be fast and nimble, as they say. And that was a really great moment, I think, yesterday when that stay was lifted. And hopefully now we'll go to court and just win that battle. Because if we don't have the power to do what they're doing to us, we are going to be a great nation no longer. I mean, I was so honored.
So those were some of the main highlights. Ultimately, Elon said, I'm done with being a special government employee, but my time at Doge is, but Doge itself hopefully does not, end in terms of being able to try to get government cuts to about that $1 trillion level, which he wants to get to. Trump took a lot of questions. He said that the tariff appeal or repeal from the international court was a horrible thing for his presidential powers. You had Peter Navarro, you had a lot of people come on the media airwaves today and basically said that this is like unconstitutional, that they can't stop the president from doing this. He also mentioned, I don't think it was in that clip, but he said, if Congress tries to approve my tariffs, pound chair 131 right here, then it's going to take months. So he said he's really hoping that the courts affirm what he's doing, even if it has to go to the Supreme Court, because if he has to go through Congress, which he's right, if he goes through Congress, like it's probably never going to get approved. So historically, presidents have had the executive authority under the Emergency Act to be able to impose tariffs. The problem is it really an emergency? And you had J.D. Vance come on CNBC today, or not CNBC, on Newsmax and say, hey, not being able to manufacture our own chips and supplies in the United States is indeed a national emergency. So the Trump White House is like, this is an emergency. We need our own manufacturing. And the courts kind of are not buying that argument. We'll see where it goes to if it does get to the Supreme Court. I do think Trump would win if it gets to the Supreme Court. but it would be quicker than dealing with Congress, because they probably are not going to be approving that anytime soon. So it's going to be interesting to see over the next coming weeks how that plays out. But that's currently what we've got going on right now. In the after hours, Robin is 66.15. Again, I don't really know why Robin had gapped up after hours or just like right into the close. It might be because of rebalancing. Maybe there's some news coming out, but that's what we did see. Pouncer as well, 131.05. Hims again after hours, still green, 7.82%. That's up. Rocket Lab, red on the day, down about 2%. Meta was flat on the day. Amazon was flat. Google also basically flat. Google got to 167 at one point during the day. Like, that's how much that China headline around tariffs took everything down. And that's when I was just like, all right, we're going to buy something here, because 4 or 5% down on a lot of these stocks is probably not reasonable. And then we recovered throughout the end of the day. I didn't expect a recovery, but we did for the most part. S&P 500 basically flat on the day, ending 6.25% for the month. Apple as well right here, 200.72. That was at like 196 at one point. And then Microsoft, 460. This is Microsoft's best month since May of 2023. And this is Apple's worst month in about 4 years, or since 2022, since January 2022. So Apple and Microsoft kind of switching spots here, but Microsoft having an absolutely great month. They demolished earnings in early May along with Meta and did very well for them. MicroStrategy right here at 369. Where is Bitcoin in the midst of all this? Bitcoin 104.4. 104.4, losing a little bit of steam today. I mean, could you have imagined if Hood went to 70? Yeah, my covered calls were saved because Hood didn't go to 70. But it got to 66.50 or 66.10 or whatever, which is not too bad. Last 10 minutes though, right? Right in those last 10 minutes, we got some of that momentum. Is anyone's X not working or just me? Let me see. Is X still having issues? Yeah, mine isn't working either. Or if it's working, it's like slightly working. There it is. This is the S&P 500. Wow, this is its best month since November 2023. I didn't know that. Look at that. Holy crap. Best month since November 2023, 6.2%. Not too bad. Yeah, X is being a little buggy. I mean, some of my posts are loading, but the other ones aren't, so it might be a little buggy right now. Not bad, dude. Not bad. Best month since November 2023, after one of the worst months since 2022, when we went back to 2022 levels on the S&P in April at 4,800. Really cool. Really cool to see this play out. Matt says, nah, my exes are still alive. Okay. Matt took that in a little bit of a different direction, but still. Not too bad. Elvis, thank you for the $20 super chat. Thank you for teaching us covered calls. Thank you for being receptive to learn about the strategies. I really like them. I think they're very productive in this type of a market, and we'll keep talking more about them. I really do think that in 2025 they can be beneficial, and we'll talk more about them with Steve when he hops on as we get into the yield max stuff, and we'll go further from there. We're not talking ASTS today. I think maybe Chris and I will do a stream tomorrow. I have to confirm it with him. But maybe Chris and I do that stream, and he'll get to give us their ASTS thesis that he has. How did ASTS do today? ASTS down 2%. Year to date, ASTS has been a little, yeah, it's up 7%. Rocket Lab year to date is, also up 7%. Okay, so Rocket Lab and ASTS kind of mirroring each other in terms of their momentum. Okay, so let's ask this question in the chat. For June, historically, over the past 70 years, June is up 0.1%. So here's my question to you guys. June 2025, green or red? What do you think? Do we go green or red to end out this month? Hey, Amit, I was at the Bitcoin conference and Robin, a crypto booth. I learned a few things. Would love to hop on and share my experience. So message me on Twitter, and then we'll definitely get you on next week and try to get some of your thoughts on what you learned. But I'm really happy that they had that crypto booth at the Bitcoin conference. I mean, basically, the reason Vlad went there was because he's trying to get more acclimated with the crypto community, because Robinhood's not a native crypto company. But the fact that they're becoming, one of the biggest retail trading hubs for crypto means that their brand in crypto is starting to be intertwined. And then they have that crypto event coming up in June, dude. If that happens and they announce some really dope stuff with S&P inclusion, I think 70 is inevitable as long as the market doesn't falter. And again, all the data we got this morning, initial jobs claims were fine yesterday. PCE was the best. For anyone who has missed this chart, this is the chart that I think was the most important today. And of course, my X is not going to load, so it's going to be hard to find this chart. Can I find it? Let's see if I can find it. X is being weird. But it was the super core that went negative. Super core PCE went negative. And then you had consumer confidence that was way better than expected yesterday. And Michigan consumer confidence was even better today. It's still 6.6% inflation expectations, which is a little ridiculous, but it's at least lower from 7.3%. Yeah, my X is not loading, guys. Sorry. But once it loads, I'll show you. Oh, do I have it? No, I don't have it. Yeah, I got it. Okay, so it's being weird, but here it is. So this is super core PCE month over month. Negative for the first time since 2020. I mean, bro. You got an EU deal that's hopefully on the table. You got PCE coming negative for the first time since 2020. I know we have some China hiccups today, but I really think that's just back and forth. They're going to be able to eventually figure it out. None of them, the US or China, don't want to go back to 150 or something % tariffs, right? Like no one wants to do that. And then to top it all off, I forgot to mention this since the morning. I didn't mention this. The Atlanta Fed says we're going to grow 4% in Q2. 3.8% to be exact. I mean, come on, bro. Like, it's just, what is really that hardcore bear case? Now, am I saying that we're not going to have a red June? No, of course. Like, we could definitely get a red June. Anything could happen, and we could consolidate for a month and whatever. But like core macro issues, like we're looking at real data, right? We're looking at the same data the hedge funds are looking at. We're looking at the same data someone who's managing $100 million is looking at. We're all looking at the same shit. And we're coming to a conclusion on how do we allocate capital based on looking at all that data. And either the data is wrong or something could happen that we're not expecting, which is very possible. But when you put all the data together, it does feel very likely that this is a renewed bull market. And if earnings growth can also keep up, it's at 13.4% right now. If that can carry into Q2, then maybe this is going to be a much more stronger year than we thought from April. Not bad stuff. All right, here we go, folks. The reason you all come to this channel, you put up with me, but there's a reason that you guys come to this channel. I was on the phone with him an hour ago, and I told him how much you guys were begging for his presence in the market open. And he said, I don't know why. And I said, dude, it's because you're you. It's because you're you. Ladies and gentlemen, all the way from New York City in his car, you'll probably hear him road rage. You'll probably hear some police sirens. It is indeed Mr. Steven Fiorillo.
Hello, Emmett.
Did you like my intro?
You're getting better at these. You could get a job at the WWE at this point.
I should get a job at the WWE.
You should get a job at the WWE right alongside McAfee.
I wouldn't be too bad at the WWE. I really would.
Hey, you'd be great.
Yeah, I'm basically.
You know what today is?
What's today?
Happy Pokemon release day for Destined Rivals.
What is Destined Rivals?
It's the new set that came out today. There were lines around the corner at every hobby shop. There's pictures all over the place. People camping out at GameStop overnight. The hobby shop my buddy goes to sold out in 4 minutes of all product that he got in for Destined Rivals.
So people really care about a new box of Pokemon that came out today.
They slept outside overnight in the rain.
Oh my goodness. It's a market, right? Supply and demand.
Supply and demand. And the supply is not meeting demand. The scalping that's going on this weekend is going to be nuts.
All right. Well, not only is Pokemon doing well, Steve, the S&P 500, best year in over 20 years for the month of May, 6.8%, 6.28%. What are your thoughts on how this market did?
You can't go by that. We had a self-infused implosion that it rebounded off of. Look at the year-to-date.
Yeah, but the point is, I know it's flat year-to-date, but my point is still, like that 10% intraday we had in April was still historic, right?
And that's why you can't sell out of fear, like I always say.
Yeah. No, it's a
You
fair
just
point.
got to be in it long term. Just buy index funds, stay in it long term, you'll be fine. The market has never not rebounded from whatever has happened, from the pandemic, from the financial crisis, from the 87 Black Monday. It's just no matter what it is, it rebounds.
Okay, so let's get into some specific questions here. Everyone has been curious about your thoughts on NVIDIA. You did call this after earnings. You thought it was going back to 135, and here we are. Thoughts on some of the NVIDIA weakness today?
I mean, I don't know if there's any new news or not. I think it was a fantastic quarter. The problem, like I said on the stream with you and Tanner and the other guy whose name I honestly forgot, it wasn't a blockbuster quarter. It wasn't a face ripper quarter. Margins compressed. First time they had under a 50% profit margin in I think 6 quarters. The the year-over-year growth was great, but the quarter-over-quarter growth was the first time it did not exceed 10%, I think, so in quite a while. So I had a really big suspicion it was going to sell off.
Yeah, I think that's fair. Now, there was a piece of news you probably don't know about, which is these more, we introduced like some new China tech sanctions, and that's when NVIDIA fell to like 132. But the fact that it recovered to 135, it's almost like the market didn't care.
It's not going to matter. And look, ultimately, I think that cooler heads are going to prevail, and this is all posturing to get a deal done. But we should want, I agree with Jensen, other people have said it, this is not an original idea for me, but we should want the world building on an American tech stack. And I've been saying it for a long time. I probably wasn't the first. I probably regurgitated it from somebody I listened to, but we really should want everything being built on this stack, because if we don't, it could create problems in the future.
Matt said you sound happy. You must have had chicken parm for lunch.
Listen, you guys got the group text, Chicken Parm Fridays.
Wait, you did?
Yeah, the WhatsApp text, Chicken Parm Fridays.
I didn't check it. I'm looking at it right. Wow, you did have chicken. Yeah, you did. Not too bad.
And you know what's funny? So my neighbor is the chief of HR, and before I walked out, I'm like, hey, I got to go to the bank and I'm going to go get something to eat. Do you want anything? He's like, nah, I'm good. And then he realized that, he's like, maybe it would be good. So I go to where I go to get the chicken parm. I'm like, what are you doing here? He's like, I knew you were getting chicken parm. He's like, I want pasta fazool. And him and I had a conversation inside Pat for 10 minutes when we could have just had it at the office. It was hilarious.
It's some good chicken parm. Put in the chat what you have for lunch today. Put in the chat what you have for lunch. Yes, X is down, guys. I don't know why X is down, but X has been down like many times this week, so there must be some reason why it's down, but it's down. Okay, cool. So markets had a great month. NVIDIA, good earnings, not great. That's why NVIDIA is relatively flat. And then we had a couple of stats today. So I want to give you a couple of stats and just get your pure reaction. So Atlanta Fed says GDP growth 3.8% in Q2. What do you think about that?
I think they were wrong last time when they said we were going to compress at negative 2.5%. And I think they're going to be wrong this time too.
You think that's too aggressive, 3.8%?
Yes.
If we did get 4% growth.
Forget it. Forget it.
I think that would be a little, that's all-time highs on the S&P pretty soon.
Maybe 2.2%, maybe.
That feels more reasonable.
Right? I mean, why are we coming out with ridiculous statements? I don't know.
Yeah, a lot of the reason people are saying that is because the imports were pulled forward from Q1 to Q2. So, there's some technical reasons, but not a horrible thing. Okay, PCE came in the best since spring of 2021 at 2.5%. You think it's time for the Fed to cut rates?
It's been time for the Fed to cut rates.
Jay Powell met with Trump yesterday. Do you think that will influence him cutting rates?
No, Jay Powell doesn't care what Trump thinks.
So you don't think we're going to get the rate cut in June?
I don't think I mean, nothing would surprise me at this point, but I think Powell is going to keep doing what he's doing because he doesn't see a reason not to. He still wants to see how everything plays out. Well, this is his demeanor. We know from him being Fed chair for the past couple of years, he likes to wait to have more than enough data to make a decision. He doesn't like doing things on the fly, and he doesn't like being rushed. He was late with everything. It kind of worked out, and now he's late with everything again. That shouldn't surprise anybody.
Yeah, I think that's fair. I think it's going to be hard to see him cutting anytime soon. But
I mean, think about it. Inflation was running rampant, and they were saying it was transitory. Like, inflation runs rampant, raise rates. Be proactive. Don't sit there and not do anything and think it's just going to settle. Now, if they weren't printing as aggressively as they were, you could make that argument. But they were printing like drunken sailors. So you can't do that. Yet they did. So it shouldn't surprise anybody that they are just sitting on their hands right now to see which way the wind blows.
it's fair. It's very fair. Jamie Dimon said the bond markets are broken today and that he is waiting for something to crack. He then added, he said, trust me, something will crack, was his exact verbatim. Do you put any weight behind that?
I mean, he's been wrong about a lot of things. But, I mean, he's also been right about a lot of things. He's one of the best in banking. So, I don't know. Is the bond market going to crack? It's only going to crack if people can't pay their debt and service the debt. That's when it cracks. So, if you don't want it to crack, guess what? Lower rates.
Yeah.
Because what is a bond? It's issued debt.
Yeah. One thing is, the bond market's coming down a little bit because our 5-year bond had the best foreign demand in about 4 years. So it's not the 10-year, the 20-year, 30-year, which really matter, but the 5-year still getting a lot more demand than what we saw last week at the 20-year bond auction. Steve, are you impressed by the resiliency of this market? Moody's didn't take us down. The 20-year bond auction didn't take us down. 50% threats didn't take us down. This China stuff today didn't take us down. It's pretty incredible.
Why would Moody's being in a bad mood take us down? Biggest overreaction there is.
Yeah, I mean, look, I think people were pointing to 2011 as the historical comparison or October 2023, but it has not been the same type of environment, given we just went down 18% on the S&P at the end of April. Yeah, guys, Twitter is down. I know a lot of you guys are saying, but Twitter is definitely down. I can't even access it myself. I don't know what is going on with it, but it is definitely getting hit. Too much money buying the dip. That is correct. There is just a lot of money that continues to be allocated in this market. All right, Steve, pound here, 130.76. Any updated thoughts on the current state of pound here?
No, I think it's overvalued, but it can get sillier. All there is to it.
Do you think there's a reasonable chance it falls back down to 70 now?
I mean, reasonable? Probably not. Is there a chance? Yes. I mean, I don't know. I've been wrong on it so far, so I'm shocked it made a double top. I'm shocked it's going higher. I'm shocked it's almost at all-time highs. Company doesn't even do $5 billion in revenue. Doesn't even do $1 billion in freaking net income, yet it's got a $300 billion plus market cap. So, I don't know.
Well,
we'll see what happens.
You're wrong on two things. It's a $311 billion.
You're right. 311. I'm so silly.
And then number two, it wasn't a double top because
it exceeded.
Correct. So
yes,
Yes. Okay. So transitioning from pound here, and then we'll talk about the yield max stuff. But Salesforce, you wrote an article about this. I'm putting it in the chat. This stock markets kind of didn't care about the earnings. What was your take on their earnings?
All right. So I know you don't really follow Salesforce that closely. All right. So did you look at the quarter?
I saw just the basic top and bottom line numbers.
Right. So they're getting really big in AI and data cloud. Their data cloud and AI now have annual recurring revenue of $1 billion, which is a year-over-year increase of more than 120%. In Q1, nearly 60% of Salesforce's top 100 deals included both data cloud and AI exposure, and 30 net new annual bookings over $1 million in Q1 included both data and AI from the Salesforce platform. What gets even crazier is the adoption rate, with 50% of Q1 new bookings coming from existing customers and increasing consumption, which when you think about why Palantir is doing so well with net dollar retention, Salesforce is seeing a tremendous amount. Okay. Their data cloud ingested 22 trillion records in Q1, which is a growth rate of 175% year over year. Their agent force had over 8,000 total deals with more than 4,000 paid customers this quarter. And I mean, when I looked at some of the stuff, I think these numbers are correct. CRM's sales agent in Slack logged over 21,000 interactions and saved, I think it was 44,000 hours annually. And Data Cloud cut lead routing from 20 minutes to 19 seconds in Slack. And then Agent Force, what was it? I think it was, they handled 750,000 cases and they're trending to reduce case volume by 7%. I mean, they're looking to hire up to 2,000 additional salespeople because of how much more efficient their actual platform is through cloud and AI. And
Right.
this is going to extrapolate through their customers. Salesforce is not only internally doing this, they're cross-selling it to all their customers. And I think that this is going to be a very big problem for the working.
Oh, we lost him. We lost him. By the way, guys, X is so cooked. I don't know what's happening with this app. It might be a DDoS attack, but like that happened 2 months ago. Yeah, we lost him. He might have his service getting hit. Yeah, he's driving in New York. Let me text him. What did he? Oh, the last time X was down was because like a data center in Oregon, like was on fire or something, right? So I wonder what's the reason this time for this one getting hit. There's the valuation right there on his article. So he's looking at it from Salesforce to Meta, Coca-Cola, and Walmart. And I mean, you know, it's not necessarily the cheapest stock in the, or it's not the most expensive stock in the broader market. We lost him. We lost him. My ex is working in England. That's weird. It's like kind of working. It's like loading some posts, but then it's not loading other posts. Or if it's showing me posts, it's posts from like hours ago. Yeah, mine's is definitely not working as well. He hit a chicken parm straw. Oh my gosh, dude. He is definitely not there. Let me call him on his phone. Let's see if he picks something from there. It might have been his service. Yo, we lost you.
I'm back. I'm in the waiting room.
Okay, say something.
Hey.
Okay, yeah, I don't know why did we lose you?
I told you I had to take a phone call.
Oh, you had to take a phone. Okay, cool.
Yeah, I had a work call that I had to take.
Okay, so valuation. You think Salesforce is cheap right here?
I think Salesforce is cheap. Look, on a TTM, they're doing over 12 billion free cash flow. This company is buying back a tremendous amount of shares. I think they bought back more than 8 billion worth of shares on 12 billion or just like 12.4 billion free cash flow. They're paying 1.55 in dividends or 1.55 billion in annualized dividends. They're starting to grow the dividend. They bought back shares the past 4 years, and they're increasingly buying back more. They're trading at 18.5 times 2027 earnings, and they have the same amount of forward growth on EPS as Meta from the end of 2025 through 2027. They both have, I think, 27.8 or something like that % growth over the next 2 years. When you look at their EPS projections and the revenue projections, both are double-digit year over year for the next several years in the analyst community, and they raised guidance for this year. This was not a bad quarter. It was a beat on the top and bottom. You had increased guidance, huge profitability, and they are expanding so much in data cloud and AI that they are increasing their sales force by a tremendous amount. They have 78% gross margins, and they are going to be a pioneer in digital workforce. Maybe the number one in digital workforce. Everybody laughed at them with this whole agent force thing. Now it's becoming a reality. You're seeing customers spend money on it. This will be their AIP moment, the way Palantir had one. May not result in 5x in the share price, but this will be their AIP moment. And I think the market's going to really catch on in the next 6 to 12 months with this. And I think people are going to be shocked at how much they're going to disrupt back office services with this new platform.
You know, Salesforce was $260 in April of 2020.
Yeah, and it went up to 350 or 400 and came back down.
So like, I guess the reason I bring that up is like, you're telling me all this good stuff about agent force and growth, but do you think the market cares? I mean,
No, I mean, I think the market cares. I think that the market gets fixated on hype stocks and growth stocks, and we are putting ridiculous valuations on those the same way we are putting ridiculously low valuations on great companies. I mean, you look at Meta. Should Meta be trading at 18.5 times forward earnings? No. Should Alphabet be trading at 17 or 16 times forward? No. Should Amazon be trading at 21 times forward? No. Not at all. Not when you have Costco and Walmart trading at 25 to 50 times. It's crazy. They don't have as much growth as these companies, yet they trade at higher valuations. Nor do they have the margins or the profitability or the balance sheets. It's just crazy. And I don't know what it's going to take, but Salesforce is going to continue to increase revenue and increase profitability.
So someone brought up a good point. They have 76,000 employees and they did 10 billion in revenue.
Revenue per employee does not matter.
But Palantir is going to do 4 billion. I'm just bringing up Palantir as a comparison. Palantir is going to do 4 billion in revenue with 4,000 employees.
I get it.
Like what's so exciting about it? I guess, I'm just trying to get deeper into why is agent force even relevant? Why do we care that much if they're spending this much to be able to?
Because here's why. Every company from Amazon to Nike uses Salesforce. Every company. My company uses it. Every company uses this, and you can't get away from it. You're locked in. The potential for net dollar retention is going to be insane. And the upcharging that people are going to do on their contracts is going to be nuts over the next couple of years. When Amazon really starts taking control, when Walmart, Costco, they start increasing services, you're going to see skyrocketing revenues.
All right.
Businesses can't get away from the CRM system. They just can't do it.
Well, Mark Benioff did follow Palantir yesterday.
Did what?
He followed Palantir on Twitter yesterday.
Yeah, Palantir's a great company.
I'm just saying, maybe, who knows? Maybe there's a partnership coming up. Who knows?
There could be. Who knows? There could be. Palantir is a great company. The difference is Palantir does something completely different than what Salesforce does. And when you look at the amount of revenue that Salesforce does and what they've accomplished, not to mention, they have offices all over the place. They have sales teams all over the place. They have more and more employees.
Yeah. No, I think that's fair. He also followed Chad, who as well, which is, who knows, maybe.
Who's Chad? I don't know who Chad is.
Chad is one of the lead Palantir AIP architects.
Oh, is he?
Yeah. All right. So are you buying Salesforce?
I'm planning on it, yes. I did something a little degenerate today.
Are we about to get into the conversation? Are we doing it?
We can get into the conversation.
Are we getting into the conversation? Are we doing it?
So because if you look at the group chat, I'm officially a shareholder.
Steve has officially bought MSTY.
I can't believe that I did it, but I didn't just stop there.
He also, I'm looking at it right now, bought.
I did not stop there.
NVIDIA's yield max NYDY. Or NVDY. Okay, so let's have this conversation. So let me set the parameters for this. First of all, none of this is financial advice. This is all two guys trying to articulate and figure out if something is a worthwhile opportunity for people. There are risks to the stuff we're about to talk about, but we are two reasonable guys that think we can understand a little bit about investing. And We're trying to go deeper to understand if this opportunity makes sense. And so basically what you guys are about to hear is the same phone call Steve and I had last night for 3 hours or 2 nights ago on if this yield max ETF stuff is a scam or if it's one of the smartest ideas ever. And if it truly is a way that people can leverage some yield. So Steve, let's start off with what was your first realization that yield max made sense and kind of what got you to pull the trigger?
All right. So I went through the numbers and I did a deep dive on the numbers, and somebody left a comment. Some people have been leaving comments week after week in my dividend harvesting series on Seeking Alpha to look at the yield max stuff. And I've looked at them before and it wasn't my cup of tea. But the MSTY one, when I looked at the numbers, I could not believe the current distribution rate was 140%. That does not mean you're going to get 140% yield. All that means is on the last distribution that it paid, and it pays a monthly distribution, that if they were to sustain that, and if the share price was to be the same share price, it would work out to be 140% over the next year. Or you can also look at it as if they were to a yield on cost. Your yield on cost would be 140% or 144%, whatever it was. So I'm like, is this really true? So I did the numbers, and the numbers are true. And I started looking at the amount of income it generates every month. And I think the numbers were something like in the past year, from where the stock price was a year ago when I had done the article, it paid 93.5% of your initial investment over the past year in income. So right there, it's not a scam because it's paying you real money every month.
Yeah.
And if it's paying you real money every month and you're able to recoup your investment in 14 months, can't really be a scam. Now, if it's a good investment, that's a different conversation. So what I had said to you is, what if you just bought it, took the distributions every month in cash instead of reinvesting them until you got your money back. And then once you got your money back, just turn drip on and just let it compound and not care what the share price does because it becomes a free investment at that point. So that was the initial. And then I started looking at the strategy again. And before, when I looked at it, they did not have a call spread strategy. And now they've updated the strategy and it looks like exactly what we do, just in a different way, which allows them to maximize their capital. And I sent you a text with a spreadsheet, and it shows you how much more buying power, or I should say writing power they have. Because instead of taking their
So hold on, before I get into that picture, let's go more high level. What are they doing to generate the 100?
Yeah, so what they're doing is instead of buying 100 shares of MSTR, okay, and then writing a cover call on it and locking up $33,000 on 100 shares to write one contract, what they're doing is they're buying a call option and selling a put option, both at the money.
Yeah.
Anywhere from a month to 6 months out. So if you look at a month out chart, the option price was $25.50, I think. So it's costing them, I don't know, $5,600 because the call option was $25.50. Let's just say the put's the same price. I don't remember what the put was. It's costing them a fraction to write the call option. A fraction. So
yeah. So at a high level, I've been talking about this a lot on the channel. You've been talking about it. Tanner's getting into it. Owning shares and using the volatility of the derivatives market for people that want to buy calls. You can sell calls against those shares by covering them with your increments of 100 shares. These guys are buying a call and selling a put, which are two bullish strategies on a stock at the money, to synthetically create the exposure of 100 shares without having to spend the same type of capital. Exactly. And then they're writing calls against it.
It lets them get in for a fraction and control the same amount of shares. And no matter what it does, it's going to replicate it because you have replication to the up and the downside. And then they're writing cover calls on that. Then they are allowing themselves to do a credit spread strategy if they think that shares of MicroStrategy are going to do really well that month or during that period. So what they're going to do is they're going to take a little bit of that premium that they generate from writing the cover call, and they are going to buy out of the money call options to generate upside. And in the graph that I put in there, I just did a very easy math. I did not add the put side, but their cost of capital is like 7%. So they can write about 13x more contracts than buying the shares through this strategy. That's how they're able to generate so much yield.
Right. So the reason I always thought this was a scam, and you probably thought it was a scam, is because we were like, how are they getting this yield? Right. It's got to be some scary FTX type of nonsense. It's like, it's not. It's just
not.
right. It's just covered calls. That's it.
Well, it's building the position synthetically, which costs you 20% or 15% of the cost of actually buying the 100 shares in order to be able to write a covered call. So they're able to maximize their AUM to create a much bigger synthetically controlled position to write calls against to generate so much more income. Because the more calls you write, the more premium they generate.
Which, by the way, anyone could do.
Anyone could do that.
I can sell a put and buy a call and then sell a call again. Like I could do that myself. The reason these guys have 12 billion under management is because people are lazy.
Yeah,
right?
And also and the great thing about it is you don't have to manage the risk.
Yeah.
As long as you go into this saying this is not a capital appreciation play, and this is not something that you are going to worry about the share price, and you understand the risk, and that there's going to be NAV erosion, the premiums are going to change, you're going to have a different distribution every month, and you don't know what to expect, but that off of the data that we have, that over a 14-month period, you would have made your money back in straight cash if you invested 14 months ago. So if you say that there's a chance of that happening again, even if the share price goes from 22 to 15 and you get your money back in 14 months in cash, you have your entire initial investment in your hands. Plus you still have your underlying investment generating monthly reoccurring income.
Correct.
So, I mean, it's interesting enough where I may have, become a degenerate today. In fact, I officially became a degenerate today.
Yeah, and for people saying free money is a scam, it's not free money.
It's not free.
It's not free money at all. It's
running a strategy.
It's the same strategy that I'm running. I'm just not doing it as synthetically, and I'm not actively managing it the way that these guys are. But that's all it is. It's just a question of
I explained it to you. After I explained it to you, you and I sat there and we went through the prospectus together. And we both said the same thing. This is nothing different than what we are doing, except on the put side, they are buying puts to create the synthetic long. That's the only thing that's different than what we're doing.
And it's really smart. It's really smart. But now, okay, so a couple questions. Let's talk about the risks. Why is this different why is NVDY different from NVDL?
I don't know what NVDL
is. It's the 2x. It's like TSL, the 2x leverage fund.
All right. So let's use Palantir because that's a better one because of the upside. So if you look at Palantir's 6-month chart, it went up to 130, it came back down to 60, and it went back up to 130. You got a double top that it broke through. The problem with these funds, from a capital appreciation standpoint, they're writing call options 1 to 6 months out. And if you're writing call options 1 month out, and the stock declines, and you write another call option, and it's staying flat or declining, but then it rebounds before that call option expires, you're never getting the appreciation.
Right.
Once
you're capping all your upside.
Your upside gets capped. So if Palantir fell to 70 and it kept falling, and you have covered calls written at 70 or 72, and then it starts rebounding and it goes up to 90 or 100, you're capped at 72. And in a declining environment, they're not running the credit spread strategy. So they don't have the upside potential. So you're completely capped. That's why PLTY did not mimic PLTR to the extent that PLTR ran, because the upside was capped.
Right.
So you have to look at this as a income generating investment. These are not meant for capital appreciation. And they are very risky in the fact that the option market is driven by volatility, and there is no guarantee that the past distributions will be generated again. There is no guarantee that these levels of distributions will be able to be sustained. And there's a wide range on what they are writing or what they are paying every month when you look at the differential on a month-to-month basis with the distribution.
Agreed. And the reason these, in theory, sound better to me than the leveraged ETFs is because the NVDL, the PITRs, the ROBNs, the Robinhood 2X leverage, the reason I hate touching those is because if the underlying is flat, meaning it does nothing, you get massive NAV erosion on the 2X leverage ETFs. Now, you will also have NAV erosion if the underlying is flat on the yield max ETFs. The difference, which is what Steve is talking about, is that we want the underlying theoretically to be flat because that means the covered call prints, because if the stock doesn't go up, you capture all the premium, and then that gets paid as a distribution. Now, if the underlying tanks like 50, 60%, your yield max is not going to save you, right? You're going to get some distribution from your covered call income strategy, but you're still going to be holding an asset that gets hit. But then again, if you own Palantir and it falls 50%, you're also down 50%, right? So this is just a way to capture yield by someone else doing covered calls for you. And you're paying an expense ratio for that. They're not doing it from the goodness of their heart. You're paying
expense ratio's not even big.
It's what, 1%?
It's 1%. It's 100 basis points. It's not even big.
Yeah.
There's ETFs out there that charge you 2, 3, 4%.
There's money managers that actively write covered calls that are charging you 3, 4% for the whole year. Like, so the point is the risks associated with this are massive, just like there's any risks associated with anything. And your upside likely is capped, just like if Robinhood went to 70 today and my $70 calls, got called away, I would be annoyed, right? Because what if Robinhood goes to 75 tomorrow, next week, and then I'm losing? But the point is, if you're using it, as Steve said, as an income generating instrument, you don't care about the stock. You care about making sure that it doesn't depreciate to the point where the income you're getting also depreciates away from the initial investment. And it's not as scary to me as an NVDL, as a TSLL, where Tesla has to run, NVIDIA has to run, because if they don't, your 2X leverage completely goes away. Right?
Yeah, I mean, I can't believe I did it, but I pulled the trigger today.
Yeah. And so Steve's in. Now, here's a good point as well. Gene says, as the NAV falls, so does their distributions because there are less assets to write calls on. That is 1,000% correct, right? So if these guys, this is why they need a lot of money to do that.
But guess what?
Go ahead.
The NAV keeps going, or the AUM keeps going up because everybody keeps putting more money into it. This freaking MSTY, it was at 3.7 billion AUM at last weekend, and yesterday it was at 3.9. They got $200 million in AUM appreciation in 4 days.
So that's the thing. Like, if the NAV goes down, then they have less assets to write money on. But the point is, people are buying the
right. People keep plowing money into it, and that just gives them more buying power. And yes, part of the distribution is return of capital. A return of capital is not necessarily them paying you with your own money. It could be the sale of something they lost money on. There's all different things that constitute as return of capital. So, I mean, it's interesting, and it's not like these things have been out for 2 months. There isn't a lot of data, but MSTY is out for 16 months. And look at the amount of income it's generated. I mean, this thing went from 20 to 46, back down to 17, now it's like 21.50.
Also, people calling this a Ponzi, that's not the definition of a Ponzi. If you are collecting more money to be able to go synthetically long on an NVIDIA or MicroStrategy, that just means you can write more calls against it. If you are collecting less money, then your distributions will go down. That's not a Ponzi.
From what I am reading, okay, and look, I could be 100% wrong. They could be scamming everybody, okay? But what they have published, a Ponzi scheme is, I'm having everybody buy into something that's fake, and I'm paying people with other people's money.
Exactly.
That's not what they're doing here. They're using everybody's money to run an option strategy, and they're writing covered calls, they're taking in premium, and then they are paying out the distributions. So, I mean, it's not a Ponzi scheme.
Yeah, and
it may sound crazy, but it's a strategy that a lot of people are doing. But they're just not doing it to this extent.
it sounds crazy because whenever someone hears about covered calls, like a covered call sounded crazy to me last year in March when I learned about it. It was crazy. And then I got into it. And I was like, holy crap, this is not a horrible strategy. So like, it always sounds crazy. They're just taking it to the next level by using less capital to buy shares and going synthetically long. Matt right here is a good comment, which basically highlights everything Steve is saying. So this is Matt's comment. Palantir was 125 in February. PLTY, which is the Yield Max Fund, was 95. Today, Palantir is 130. PLTY is 65. This is exactly what Steve just said, which is that if you have a stock like a Palantir that falls 50%, like it did in April, and then within less than 30 days recovers that 50%, Yield Max will be a horrible investment because you need the underlying to not gap up aggressively or not gap down aggressively. Why? Because you're writing a covered call. So if you bought Palantir shares at 75 on like April 15th, and then you wrote covered calls for 90, you would also be in trouble, right? Because Palantir went to 130. So it's the exact same logic as if you bought shares and you wrote your own covered calls, you'd be underwater. In this case, it's just an ETF that's doing it for you. So that ETF has not recovered in the same way that Palantir did. But then again, how many stocks actually go down 50% and then go up 50% within 30 days? Not many, right? And so Palantir is a unique example. You've got some other examples, but that is kind of the reason for how this plays out.
I'm going to call back in 5 minutes. I have to run back to the office for something.
Okay, cool. So yeah, that's the kind of thesis on it. Look, now I have not bought into it. Steve officially saying today that he bought into it. I've not really allocated into it. I'm just like, as someone who is interested in the derivatives market, it is one of those things where I'm like, this is a very unique strategy, and I'm trying to find the red flag. And again, the red flag is as red of a flag as if you're writing your covered calls on your own shares. The only difference is you own those shares, and theoretically your shares, don't have an expiration date like these synthetic longs that they're creating. But if they're actively managing it, as long as the underlying stays relatively within 5 to 10% of their strike, it generates income. And as a result, it gives you a distribution. Now, for everyone talking about taxes, but see, the taxes part, I always get confused when people talk about taxes. Taxes are inevitable. Like, yes, you will have to pay taxes. Like, this is like, if you're going to move up in life and make money, you will have to pay taxes. It is what it is. So if you're getting if you have 100,000 in MSTY and you're getting 10,000 a month or 7,000 a month or whatever it is, 30% of that gets taxed. But like, that's life, right? Unless you're going to set up something in the Cayman Islands and you're going to have to pay taxes. It is what it is. Now, if you own MicroStrategy stock and then sell covered calls against it, guess what? You're going to have to pay taxes as well. This is just a easier way to do it because you don't have to actively manage it. But taxes can't be the concern. If you're scared about taxes, then just buy stock and never sell it, and then wait till 10 years out for it to sell. But like, you're gonna have to pay tax. By the way, speaking of taxes, the IRS sent me a message yesterday, and they want another $3,000. And I gave them so much money in April, and they're saying I'm missing $3,000. So I'm gonna call them up. I was supposed to do that today, but I forgot. I need to call them up on Monday and be like, how do you guys need another $3,000, dude? I gave you guys so much money. Why do you want more? But yeah, people would rather gain nothing to not pay taxes. The taxes thing, it always is weird to me. Like, people are like, oh, when you sell options, you have to pay short-term tax. It's like, yeah, when you make money, you got to pay taxes. Like, and unless you're trying to go to jail and hide your gains and commit tax fraud, like, no, you're gonna have to pay taxes. It is what it is. But that can't be a unique reason to not want to pursue any, strategies. You need a better CPA. Maybe I do, bro. I'm like, dude, why are you guys asking for another $3,000? They did this last year though, and I called them up and they made a mistake. They like had the year wrong or something. Dude, the IRS makes mistakes, bro. Like, you always call the IRS just to be like, hey, do I actually owe this money? Can you check again? Because last year they were asking for like another $4,000, and I was like, guys, like, I'm pretty sure I don't owe you guys another $4,000. So hopefully that's a mistake. But I thought Trump fired all the IRS agents. Why are they asking? Why are they auditing? Why do they need more money? But anyway, that's kind of the thesis. And when Steve gets on, we'll talk to him a little bit more. But no, I filed like in March. I filed early my taxes. I didn't even wait till April 15th. So I don't know. Maybe it's some random thing. But I don't think it's that crazy. Short-term versus long-term gains make a difference. Yeah, but again, if you're actively selling options or doing anything that generates short-term income, like a dividend yield, right, where you get paid every quarter, you have to pay taxes. Like, if your strategy is buy the stock and don't sell for 10 years, that's great. But if you're managing a portfolio, even if it's not $100 million, but if it's a couple 100,000 and you're generating some income off that portfolio, which a lot of retail investors are starting to get interested in. Hey, how do we manage our portfolios like a hedge fund manager is managing their portfolio, where they're taking advantage of the volatility? Then you have to pay taxes. Like, that's just life. You got to pay taxes. So I don't think that's the reason to be upset at this. There are better reasons like NAV erosion and stuff like that to be against the yield max stuff. But again, it is simply, in my opinion, way better than an NVDL or a TSLL. The only reason TSLL has pumped this year, or has pumped in the past month, I should say, 45%. It's still down 38% year to date. You had to really buy it at $10 before Tesla mooned in the month of May. If you bought it anytime else, you probably didn't make money. But you need Tesla to go up when you buy a leverage fund. You need NVIDIA, MSTX. I like that one also. I'm not a fan of. Why? Because you need MicroStrategy to go up. And if MicroStrategy doesn't go up, MSTX is not going to give you the leverage that you're looking for against something like MicroStrategy that's already so leveraged. With some of these, with the yield max funds, you don't really need it to go up. You just need it to stay within a range, because that's the whole point of covered calls, is you generate income inside of a range. So like the 143% distribution sounds crazy, but it also sounds crazy when I say, hey guys, you could generate 3% a month. Like, it sounds great, but like with conservative covered calls, there is a world in which you can generate 1 to 4% a month just doing it yourself. Remember, the reason they're able to get that type of yield, this is very important to understand. If you read it like HIMS, right? We were looking at HIMS. Someone was paying you freaking 2% to write a $90 covered call. Why is that happening? If for June 20th, which probably today is paying you like 4 to 5%, because HIMS is up 8%. That's happening because HIMS has a shit ton of volatility, and all that volatility leads to all these people being excited to buy calls, which you as a seller can benefit from. So that's the first thing you need. Number two, the reason Yield Max is able to benefit from that volatility more than you can with your own covered calls is because they're not buying 100 shares of HIMS. They're buying a call and selling a put at the same time, which means they have more calls they can sell, aka generating more yield than someone who's only working with 100 shares of HIMS or 10,000 shares of HIMS, because they could have 25,000 shares or 25,000 spreads versus 10,000 shares, because it's less capital that's required to buy the call, sell the put versus buy the 100 shares all at once, which means they can generate more yield. And that's why I think this is making sense, that they're able to raise this much money from people, because the more money they get, the more spreads they can buy. And that means the more calls they can sell against it. So again, there's obviously risk to this, and I'm not sponsored by them. I'm not endorsing this or anything like that. I'm just curious about like this strategy in the markets, and maybe it crashes and burns. Who knows? But the underlying to me is the most important thing. If a MicroStrategy or a Palantir goes to shit, like these also will get hit pretty badly. Now, the covered call premiums and your distributions will be there. Some of those distributions will probably decline if the underlying gets hit. But if the underlying stays in a relative range, then it's not the worst in the world. Why not just do a poor man covered call yourself? Yeah, you can. That's basically what they're doing. It's just most people don't want to do that, right? Most people don't want to actively manage it. Most people just want to buy something and get a distribution. Like the majority of people, they don't actually want to like do it themselves. But you can. You literally can. It's not like that. That's why I'm saying it's not a scam. And for people saying it's a scam, it's like you can do this yourself. They're just doing it in a fund, right? And they're doing it with a lot more money. But doing this yourself is also not necessarily a scam. I still haven't filed my tax yet. All right, bro, you got to file some taxes, bro. We're May 3rd. We're about to be in June, bro. We got to file some taxes here. You don't pay tax if you just in your Roth IRA. That is also true. Majority of my trading though is in the brokerage account. How many people own these at all? How many people have money in yield? I know a lot of you guys said in the morning you're in yield max, but put in the chat if you actually own or if you have any money inside, and how long you've been in these yield max funds. Where's Palantir after hours? 130.77. A little bit of a green candle right there. We did close at 131.94. Tessie 346, and then Robin at 66 after hours as well. Dragos has it. Doug has some. Andrew says, I live in Cyprus, 0% capital gains. Yeah, Singapore, Belgium, Cyprus. If America ever gave us freaking no cap gains tax, it would be the greatest thing ever, but that's not going to happen. Miss KM bought MSTY on Wednesday. The funny thing about MSTY though is, again, someone mentioned this in the morning. If Saylor keeps diluting, MSTR is going to stay flat, which is technically good because you don't want, if Bitcoin goes to like 120, you don't want MSTR to go to 500 because MSTY will not, like, it would have been better to buy MicroStrategy, right? Because the covered calls will cap your income. But if Saylor keeps diluting and MicroStrategy stays within like a $30, $40 range, the covered calls keep printing. And it's actually more beneficial than if it like went up like crazy. Now, granted, if it goes up like crazy, you probably get a lot more assets under management, but your upside is definitely still capped. But then again, if you were buying shares and selling calls against them, also your upside would be capped, and you would have to roll those positions or whatever to be able to navigate them. So to me, what they're doing is exactly what a regular person would be doing. They're just doing it with a lot more money, and they're charging, a fee to do that. So yeah, those are kind of the thoughts on this one. We'll see when Steve gets back if you want to answer some more questions as well on these, and then we'll keep going from there. Now, again, remember, if the underlying is flat, that's also not the best thing for the yield max ETF. That I acknowledge. Even Steve said that as well. The question is just how much do the distributions get hit if the underlying stays flat? Like, you need volatility, right? Because it's a covered call. You need, or it's an option. Options thrive on volatility. That's why HIM's options are juiced up, because there's so much volatility up or down. So staying purely flat is not good, but staying within a range is also not horrible, because that range gives you the upside green days where the calls are juicy and the downside red days when the puts are juicy. And then it just kind of goes back and forth. But MSTX, if MSTR is flat, that's dead. BITX, 2x leverage Bitcoin. If Bitcoin's flat, that's dead. TSLL, if Tesla's flat, that's dead. Because those have to have a move in order for them to, to also make any level of momentum, or to have any level of momentum if a Tesla or a MicroStrategy or an NVIDIA goes up. And it's kind of funny because NVDL, again, doesn't pay a dividend, but people buy these as like long-term investments. This thing has $4 billion under management. MSTY also has the same $4 billion. So you got two sections of retail. The one section of retail that wants exposure leverage to NVIDIA, which means NVIDIA has to go up in order for this thing to go up. And then you have another section that says we just want our income in our distribution. I think the kind of takeaway is that there's just plenty of retail demand or excitement for these ETFs. And, that's why we're seeing a lot of this momentum as well. HOOY just came out. That's a hood ETF. What is this? HOOY. Oh, that's the yield max one. Okay. They've had this for a while though, right? I know Robin, that's been out there for a while. This one they've had since May 9th. All right, there you go. So that's their hood one. And that one also is capturing a lot of distributions as well. Amid, how long do you have to be in the ticker? I think it's like before the dividend date, from my understanding. I don't think you have to be. I'm not confirmed on this, but I don't think you have to be in it for like a month or something. I think you just have to be in a couple of days before the ex-dividend date to capture the yield. But I haven't invested in them, so I don't know exactly. But I would imagine it's, you don't have to be there literally for a couple months to get there. Okay. Yeah, it's new. Yeah, it came out May 9th. So on their website, they have they have Tesla, they have Apple, they have NVIDIA, they have Amazon, Meta, Google, Coin, Netflix, Disney, Microsoft. I mean, they're running this on basically anything that has volatility. They have short versions of it, right? So they're doing it on the opposite side. I mean, dude, they're basically taking it to the next level. And again, you pay, the expense ratio is 0.99%, so you have to pay for it. But if you're okay paying 1% to have it managed, then there you go. They don't have one for HIMS. I don't think they do. But with the way HIMS is going, do they have one for HIMS? They should have one for HIMS. I mean, the volatility in this could definitely generate some obvious exciting premiums. Let's check the options today, the most traded options in the market today. Let's take a look at that. Oh, wow. Here we go. Look at this. NVIDIA, 5.2 million. Tesla, 3.7 million. Palantir, 2 million. Apple, 974,000. Palantir got to 2 million, bro. Top 3 on the day. Holy freaking crap. MicroStrategy 700,000, iBit 619,000, Amazon 537, AMD 465, Google 465, Intel 448, UNH was up there 321,000. Lucid made the top 20. Was there a Lucid headline today for Lucid options to be traded? Lucid was down 6% on the day. Marvell 272,000, SMCI 376, Meta 380, and then Microsoft 329. That's a decent amount of options traded on these tickers. The ticker for HIMS would be Himothy. Yeah, they definitely should do that. They absolutely should make it Himothy. Amit, do you think it's a good idea to buy $100 calls for September and $200 calls for September? No, I do not. I am not a fan of short-term calls. That's just never how I've invested. They make sense when you know how to swing them. Like Jason, I don't know if he would do those exact ones, but Jason would do that, but he would have an exact entry and exit point defined for them. He would definitely not wait until September, unless they become super, super deep in the money. I just think buying call options with, less than 18 months is a bit of gambling, because you just have to, you have to be right. So is Robin going to be 100 by September? I have no idea. My bet would be no. I would be happy if it is. But if it's not, your call option is worthless. Now, if you sell it because Robinhood pops to 75 on S&P inclusion or something, then your call option you can sell for a profit, right? You can just take that contract that you paid maybe $5 for and sell it for $7 because it goes up, even if the strike price isn't achieved. But if you're, banking on the fact that Robinhood's going to be 100 by September, based on the premium you have to pay, it has to be above 100, right? Because you're paying a premium for that $100 call. So maybe you're paying $7. So it has to be technically at a 107. And it really has to be beyond that for you to make any profit. It's just, I don't know, in 4 months, can you expect that big of a move? It's hard. It's hard to imagine it. Especially in this market, like in 2024, maybe, and that's why a lot of people got rich in 2024, because a lot of people did buy short-term calls and they printed. I mean, dude, there are people who are in 2023 bought Palantir 2025 $15 call options when Palantir was $7. Palantir January 2025 was 90, so it's like those are when they print, but that's because Palantir was so undervalued back in 2023. Whereas Robinhood at 66 right is not undervalued. I still buy it because I have different strategies I run on it, but I don't think it's necessarily cheap the way it was when I bought options on it when it was $8. So Mid only likes leaps. Yeah, pretty much, dude. I'm not sophisticated enough to be able to trade short-term options. Maybe one day as I learn more about it, but for now it's, and I don't have any leaps outside of grab. I don't have any leaps because I just don't think anything is super attractive to hold on to with an expiration date. Yeah, you have to have some insider information like Nancy. Exactly. Dude, there was this, have you guys seen this clip? There was this video of someone talking. Oh, wow. HIMS is cutting 4% of its workforce. Maybe that's why HIMS was up 8% on the day. Bloomberg reporting right now, HIMS is going to fire 68 people. So about 70 people losing their job at HIMS. Okay. There you go. No, I still have my Google Leaps. I still have them. I didn't sell them, but they're down like 40% or whatever. But see, that's the thing. I thought Google would be way better than what it was this year. And that's another reason why I don't like short-term options. And I bought them with a year, so that wasn't short-term, but still, it's like if Google doesn't recover in the next couple months, those are dead. So it's same with TLT. I have like 15 TLT $100 calls, but they're doing bad because TLT is not really making a move. And in the next couple months, if TLT doesn't make a move, those are dead as well. So unless you are absolutely certain the move will take place, it's hard to imagine the option will be more valuable. All right, so HIMS right here, losing 4% of their workforce right now. I think that could have pumped the stock today. I mean, layoffs are technically bullish for companies as they cut costs. That news came out after hours, though, but maybe someone knew during the day. So that could have been the reason for a HIMS pump. And then here's the video I want to show you guys. So this is one of the guys who is the vice chair of the Democratic National Committee. He was caught talking about Nancy Pelosi.
I would say Pelosi's actually very good at her job. I don't agree with the stock trading stuff. I mean, she gets better returns than almost every hedge fund in this city every year. Some of these members of Congress make trades that are like way too well timed to not have like insider knowledge. They happen to be some of the best financial analysts in human history.
Have you spoken against that?
I've talked to them in the past, but it's also like I know that if I pick that fight, it's going to be harder for us to get gun control passed. So I have to pick my battle. Like the hardest part about my job is I just want to burn everything down because it's all so corrupt. But you got to pick your battles and slowly build your momentum.
So the dude is literally saying that if I pick my fight with Pelosi on her stock picks, I won't be able to get my agenda passed when it comes to gun legislation. So, you know, I mean, he's right. Like, if you challenge the bureaucrats of the party, it's going to be hard to get stuff done, especially on something that doesn't even affect him, like stock trading, but does affect regular citizens. But it's not an issue that's strong enough for him to, you know, care about that more than gun control. So nonetheless, it is one of those things where I don't know if congressmen will be able to be actually banned from trading. I know Josh Hawley is trying to get that stuff done, but realistically, I think they will continue trading. Palantir right here after hours 130.9 and then Hood 66.15. Nate, I see you're in the chat. Do you think this HIMS sell-off is bullish or bearish? Or not sell-off, but layoff. Do you think it's bullish or bearish? I think it's bullish. I mean, it's not good for anyone to lose their jobs, but from a company perspective, obviously, if you pay less people, your cost of labor go down, your margins go up. Now, the one thing is are they seeing less demand, and that's why they're laying off people? Because that would be bearish. But based on the quarter and the guidance we got, it was a great quarter. I wouldn't imagine they're losing demand. I could be wrong. But I think that's how it goes, bullish or bearish. 4% is just trimming the fat, in my opinion. Definitely leaning bullish. How many employees does HIMS have? HIMS employees? 1,600 people. Okay, yeah, that's not an aggressive amount. All right. It does feel a little bit more like they're just getting more momentum from other areas, maybe even AI, so they just don't need that many people either. Less SBC, yeah, that's also true as well, depending on what type of employees they are. All right, where is Steve, bro? He said he had to go back to the office. That means his boss probably. I'm going to call him and see. Why would he have to go back to the office? It's a Friday. Oh, he ended my call immediately. Yeah, he's probably in a meeting, bro. See, this is why I say when you guys are like, get Steve on the show, and I tell you he has an actual job, even on a day where he's supposed to be on the show, he has work shit that comes up. Tell you when he can't make it, he can't make it. He got in trouble for the layoffs. Oh my gosh. Steve's at a very high level in his job. Like he's like just below C-suite. So I think he's not really at risk of getting laid off. He could theoretically, but again, he's at a pretty high level in his company. That's also why he's been so much more busy. Amid Sydney Sweeney is selling her own bathwater. Okay, so I did see that headline. It is a bit weird. I think it's like a marketing thing, but yeah, Sydney Sweeney is selling her own bathwater inside of this new brand she's starting for soap. It's like, I saw the headline. I thought it was fake. And then I saw it got confirmed as real. And I was like, oh, okay. I guess that's the thing. So it's a bar of soap called Squatch, Dr. Squatch. Well, she's teaming up with them. And some of them are being made from her bathwater. It's like, is so stupid, but like the marketing obviously is what they're going for here. I don't think that's sanitary. No, I would not think so. I would not think so. But there you go. Why is Steve working? He loves working. If he wasn't working, he'd be pumping out more articles every day, but he loves his job. He also loves the security of it. I don't think he needs to work technically. I mean, he's done well enough where I don't think he literally needs to work, but yeah, he does enjoy still having that work. Can you ask Steve about NVII? This is from RecShares. Okay, I'll look at this one. It looks like another covered call ETF on NVIDIA. See, again, there's a lot of, it's not just YieldMax. There's a lot of covered call ETF companies. They've been around since really 2012 is when they started. But the difference with these guys is they don't buy the shares. That's the difference. They go synthetically long. At least that's the difference I've seen from all the other ones that I've researched. The other ones spend more money buying 100 shares of Apple. These guys don't. And so that's, I think, like the unique thing that they've been able to do. But yeah, there are a lot more of them. SPYI is another one. QQQI. Like there's some that run covered calls on the ETFs themselves. Roundhill, RecShares, YieldMax. What's the other one? Defiance. There's a bunch of these companies that are doing it. What's the most amount of money you've lost in one trade? It's not really a trade. It was an investment, but it was like 20 grand in a biotech 5 years ago. I think that's the most I've like legit lost. I feel like I've lost 2-3 grand here and there on different trades, but like that one, I just completely like, I was wrong, like completely. So I sold, I got whatever left I could out of it. And I took the L. But it was a nice tax loss harvest, at least that year. What about UNH Leaps? Look, the thing about UNH Leaps is you got to be sure this thing's going to rebound, right? Like it looks like it's undervalued, right? I mean, it is UNH is undervalued. Like there's no cutting it. Even at 300, it was ridiculously undervalued. At 248, it's undervalued at 300. But are you going to be right by 2027 that it's going to be back to your strike price at 450 or 500 or whatever? That comes down to conviction, right? Like that's the thing about Leaps. It's like, do you really believe it'll get to the level that you want it to get to in a few years? And I don't know. I think United Health has some structural problems, some DOJ stuff. They're going to have to deal with a lot of shit. Now, granted, it would not surprise me if they get back to 600 because it's really undervalued here. But there is also a reason why it's down. Same thing with Google, bro. A lot of people bought Google, including myself, but a lot of people also bought Google calls for 2027 in that 220, 230 range. There's like crazy open interest on those calls. And they bought them when, Google was at 190, right? 180 during the beginning of the year. Like, is Google going to be above 200 by 2027? I don't know. I would think so, but what if it's not? And if it's not, then, those are just not going to work out. Let's bet when the stream will end. I would say 6:15. Oh my God. I think Steve's done, bro. Unless he pops back on. But if he went back to the office, that means he's probably got some work shit to do. I'm going to be live again later today anyway. So Palantir Weekly will be live. Matt, me. Someone's cooking something. All right, give me a second, guys.
Your issue about is there a crack in the bond market? Hey, that would be a problem. What we always talk about is a stepwise function up in rates. And if that does occur, we're going to have a VIX that does spike up. You were talking about the VIX earlier. You will have a VIX that does spike up. Ultimately, can you fix that? Yes, I think we can fix that. And the other positive thing is, I think we really know how big the deficit is going to be, and we can start working from there. Now you're stopped out.
There was a tremor in the bond market. There wasn't a quake, okay? Dimon speaks of a larger incident that could have a dramatic.
All right, we're good. It wasn't my grandma, bro. It was my mom. Dude, it's like every week, dude. It was not my grandma. It was my mom. All right, we're back to normal. We're good. Dude, our fire thing is so sensitive, which is probably a good thing because it's like more safe, but it is so freaking sensitive. Like even a little bit of smoke and then boom, it goes off. It's like, bro, like there needs to be a little bit of steam sometimes. Yeah, so many of you guys are saying it's you thought it was your house. Yeah, I know that was my mom. That was on fire. Yes, exactly. The gains in May were too hot. Your dogs freaked out. I'm sorry about that. But yeah, that was definitely my mom. All right, Steve texted. What'd he say? Yeah, Steve's done, folks. He's done. Work stuff. He's done. All right. I think that's it. I think that is it. Palantir all-time high alarm. Well, we got close, bro. We got freaking close. It was a fun market open, dude. That thing just gapped up instantaneously. Like within it was around like what? Like 10:30. It just started gapping up from like 124 to 127 to 129 to then 131. And we closed at about 131. Right now, 130.8 right here. My dogs freak out every time the alarm goes off. Yeah, I don't have dogs, but if I did, they'd probably be freaking out every time. This happens at least once every week. At least once every week in my house. All right. I think that's it. And we'll be back tonight, 11 p.m. Palantir Weekly. We haven't done it in 2 weeks, so we'll do that. And I don't know if there's probably not going to be a Sunday future show because I'm getting to DC a little bit late at night. So not a Sunday future show. I'll be back on Monday morning. Monday morning's going to have to be a quicker market open. So I got to leave by like 10:15. And then there's going to be no market close likely on Monday. But then Tuesday, we'll get back to regular market open. So next week's going to be a little wonky with some of the streams just because it's a lot of traveling. It's for good reasons, though. You guys will see. It'll be good reasons. But yeah, we'll be a little dicey on the scheduling. And then hopefully Robin gets into the S&P next year. Or next week on Friday. And if they do, then that would be very nice for all of us. When are you moving out? August. August, we're moving out. And I got to honestly prepare a lot more for that. I haven't done what I need to do to move out. But yeah, we got 2 months left. And then we're moving out, bro. August is going to be wild. It's going to be kind of crazy. I think with that Miami meetup again, working to plan that out. I will get you guys more details in mid-June for that. But yeah, I've got a plan so so again, in the new apartment, there's not a skyline view. Hopefully next year we can upgrade to that. But this year I just I took the safe route of getting the apartment and confirming it versus waiting even longer to get my skyline view. Because I really want the New York skyline. Like, it's just been a dream of mine for my entire life. I'm not a materialistic guy, but that's just one thing I've always wanted. And I'd rather wait than be stuck trying to find an apartment. Because if you don't get an apartment in the next month and a half, like, you're done, right? Like, especially in Jersey City, close to New York, like, that's when everyone's getting their apartment. And it's like, you either get it now or you're done. So the apartment has everything I want except that skyline view. And I do think, because it's on the 17th floor, the market open theoretically could have a good view of like the view in the background, even though again, it's not really a skyline. So, but also like we want the bricks, right? So I'm like, I don't know. Do we want the bricks in the background or do we want like a whole new different way of having the background? And so I've got to like move in and kind of experiment with it and see what looks better. But it is a nice view. It's just not, it's one of those views where you can see over like New Jersey and stuff and like see a bunch of cars and buildings and stuff, but it's not like World Trade Center and Empire State Building, which is, you know, what I really, really wanted. And the thing is about this, so this apartment complex has those views. They have it. It's just on the other side of the building, and no one was giving up their apartment this time to allow me to have an opportunity to even bid for it. This one was the only 2-bedroom. I'm going to go on the website right now. I want to see if the freaking bedroom, if they have any 2-bedrooms, because this was the only 2-bedroom they had, which is why I snagged it up as quickly as I could. What is the name of this place again? Oh yeah. Okay. Let's see. I'm going to go to availability. Let's see if they have another 2-bedroom. Availability. Nope. They don't. They have 7 left that are 1 beds, and then they have a couple that are studios, 0 beds, just 1 bath. So I really do think I got lucky because it has everything I want, from amenities to where it's located. It's near the train, all that stuff. I just don't have my view. And so hopefully next year we can upgrade it to the view. But I think the view is still cool enough to maybe make it in the background. But you know, maybe we just keep it in the the bricks in the background as well. So we got to see. We got to see what we do. I mean, if you live in an apartment, are you going to be able to ring the bell early in the morning? Dude, I don't freaking care. They can complain all they want. There will definitely be a bell that is being rung every morning. I don't think it's going to be that much of an issue. I'm pretty sure there's like some level of soundproofing in the rooms. For those asking, how do my grandparents react to the bell ringing? I don't think they hear it because they're downstairs every morning. So I don't think they hear me ring the bell. But if they did, it wouldn't be new to them because, you know, they ring a bell when they pray in the morning anyway. So it's similar to that. Dude, you guys are asking all these questions. I was about to leave, but now I'm answering all these questions. This is yo, Gene, you're 6:15. Who knows, bro? Who freaking knows? Like, because now I see all these questions. Like, this is why whenever I get close to leaving, there's like a trillion questions, and I'm like, I'm just trying to find a way. Like, it's just, and then it just keeps me here because you guys know I yap, and so once I start talking, I end up staying here. Even though I'm gonna be back anyway at 11 p.m. for Pounter Weekly. Dude, every time you guys you just give me the drugs and I take them, and the drugs are questions. Like, you give me questions, I take the questions, and then I go into these whatever rants I go into, and then we stay longer. Is there a doorman? Yes. Dude, this place is expensive, bro. It's expensive. I don't want to say how much I'm paying, but I'm paying a lot, bro. Like, it's a lot of freaking money. So there's a doorman, there's amenities, there's a lot of shit. So I'm paying enough to the point where if someone gets mad at me ringing my bell, I'll be pretty annoyed. But yeah, it's an expensive one. But it's okay because YOLO, right? You only live once. So no, in all seriousness, dude. Like, first of all, there's a tax benefit for what I'm doing, especially because it's like a home studio. Second of all, I'm 27. I'm going to be 28 in a couple months. Only time I've lived alone is in college, and I enjoyed it, but I lived in a shitty $500 a month room inside of a house in college. And then 3, this is what I've worked for, right? Like, at some point, you got to spend what you've made. You got to enjoy the luxuries of life if you're going to work this hard to even have a chance to engage in those luxuries. And I show this every time. I don't have a lot of luxuries, bro. Look at this thing, bro. This freaking slipper. Look at this falling. Like, I could order a $50 or $25 Adidas slippers from Amazon today, which I probably should because I got that $100 gift card. But I don't, because I don't spend money. Like, I'm not a spender. I don't care about materialistic stuff. I've just never cared about that stuff. But experiences, I really do, care a little bit more about it. And, I've been home for 5 years. So I really do want the next 5 years to be something enjoyable. And if that means you have to pay a little bit more rent, all right, dude, I'm going to die one day. Like, I know on my deathbed, I would appreciate from 27 to 33, I was able to really live it up as a bachelor near New York City versus be afraid that I was paying too much in rent when I can't afford it, right? That's the other reason I'm doing. Like, you have to prove you can afford it. I had to give them all my financials, so they had to see everything to know that they could comfortably say Amit can afford the rent every month. And that's why I'm doing it. But I wouldn't say I'm cheap either, though. I'm not a cheap guy. Like, I give away a decent amount of money in my own different personal life to, my family and stuff. Like, I'm not cheap at all. I don't care about materialism. Like, I don't like, we're in the same hat for like a month, dude. Like, I don't like, I wouldn't say I'm cheap, but I definitely do want to spend on shit that matters. And I feel like the apartment experience matters. The reason I'm not buying a house, again, is that there's so much money on the mortgage taxes, on the down payment. That money could be better used in the market. Second of all, I don't want to be responsible for a house because I'm traveling every month. So, there's certain things where it's like, I did all the math on would it make sense buying a house using the property tax reduction, all that stuff in my tax, and it just made more sense to rent. It really did. And I think, given the private investments I have in the next 3 to 4 years, I'll be able to liquidate those, and that would be the money I use to buy a house, not my Palantir, my Nvidia, my Robinhood. It just doesn't make sense to sell those stocks when they're growing in their infancy to put a down payment on something that's barely going to appreciate just to say I'm a house owner. Like, that's not like, no, like, it's like I'm in the markets. That's what I do. That's how I invest. So the house thing is just not, but other people that are super skilled in real estate and understand it way better than me, like, it's how they, people have different approaches. But for me, I'd just rather be in the markets versus, in real estate. Please tell me you're getting a new chair. And I think we should keep the OG chair, bro. We got to keep the OG chair. I feel like the OG chair. We'll have his butler ring the bell. Oh my gosh. Dude, they better not get mad at me if I ring the bell in the morning. I hope I don't get any apartment complaints. Trump is live? There's no way Trump is live, bro. If he is live, that would be incredible. No, he's about to go live. This guy, bro. He's about to go live to talk about the U.S. Steel deal. My goodness, dude. This guy finds a way to go live every time. Every time. What's the brick situation in the new apartment? I don't know. I don't know if we're gonna implant bricks like I did with these, or we're just gonna have a view of the background. Like, I don't know. Also, the thing about the background is when it's sunny, I don't know if it's gonna have a glare on the camera that's gonna be like too much for the market open. So, yeah, I mean, like, we might have to have it in a closed room with the bricks. We got to figure it out. But so I got to like actually go there a month before and test out a bunch of different ideas. But I'll give you guys a full tour. I want to make it like something. I want to make it. I said this the other day. I want to make it the most hospitable apartment for anyone who comes and visits and chills. Like, I want there to be plenty of drinks and just like lounges and couches where people can relax. Like, I want there to be some cool stuff. I want there to be like, I don't want like lava lamps per se, but I want cool stuff like a lava lamp. Like, I want like just cool shit. Like, if you were to go into an apartment and there's this like sculpture of something or something, like, I want just like, stuff that makes it really unique. Stuff that people just want. Like, I want, I'm not a big fan of paintings, but I want like a big quote on the wall of like quotes that I admire. Like, there's great quotes from Michael Jordan and stuff. I want interesting shit like that. So I really want to decorate it in a way that would be pretty cool. So we're gonna figure it out. We're gonna figure out how we do it. Honestly, sell a single brick as a way to support the channel. Didn't you install those bricks, not implant them? Yeah, I installed them. I implanted them and installed them myself with my own arms. You want to look like a Palo Alto conference room. I just want it to look cool, bro. I don't know what cool looks like, but I want it to look cool. I want it to have a bunch of different ways that it actually looks dope. A sculpture of Tom Lee. That would be fun. You need to have a table with a guest microphone so you can have people over. Yeah. So the second room, the goal is to turn that into a podcast studio. That's why I wanted 2 bedrooms. Otherwise, I would have got 1. But yeah, I want to make it cool. Chris Camillo wants to short Perplexity. Really? Interesting. Did he tweet about that? Chris Camillo. Wow. I don't know if I agree with that take. Perplexity is growing like crazy. I don't know if I would agree with that. I guess because he's so big on OpenAI, he thinks that OpenAI is just going to commoditize Perplexity, which that's a fair point, right? Like, why would anyone use Perplexity when there's all these LLMs? But still, so many people use Perplexity. So like, they found a way to grow in the midst of, the LLMs being useful regardless, That's interesting. That is interesting. All right, so here's a little bit of the Trump conference. We won't watch the whole thing, but here he is right here. No, we can't freaking have the audio. The music's on. Is this in Pittsburgh? Oh, yeah, this is. He was on Air Force One. He went to Pittsburgh. I forgot. He's at Pittsburgh right now. Yeah, their labs feature is great. Also, their finance stuff in Perplexity is great. They've been doing a lot in the finance space. It's interesting that he wants to short them, dude. I think Perplexity it's a good product, even if it's a product that, other people will use Grok or ChatGPT for the same thing. Interesting. Okay, so he's going to be talking about all the jobs that Pennsylvania is getting because of the United States Steel deal. I forgot he was going to Pennsylvania. Yeah, what happened today? All right, guys, that is it for me. You can watch this. I'll put it in the stream. This is going to be like an hour long. He's going to be basically doing a campaign rally the whole time. Sorry for Steve. Work stuff came in. Hopefully we can get him on later next week. Next week's going to be a busy week. I will keep everyone updated throughout it. We still have Palantir Weekly tonight at 11 p.m. Eastern. So we will do Palantir Weekly. A lot of stuff to talk about. It's been about 3 weeks. We got tons of deals to discuss. Stock price getting close to all-time highs. And I'm sure we'll have more. So Arnie, I think, should be able to make it this week, along with Matt and Amir. And yeah, that is pretty much it. So, all right, there we go. Very successful month of May, up 6.28%. Best month since November 2023 for the S&P 500. Best May since, that's the Trump link, by the way. Best May since 1990. So not bad for the markets. NVIDIA earnings were good, even if the stock price didn't react. Overall markets are doing not too bad. And now we start off the last month of Q2, which is June. And we see if we can hopefully get this momentum to continue doing what it's been doing for the past couple months as well. All right, that's it. Thank everybody. Love you all. Appreciate everyone being here every single day. We'll keep doing it. Keep doing what we got to do. I'll be back again likely on Monday, probably not on Sunday night. Pouncer Weekly later today. And yeah, Martin Shkreli thing was crazy yesterday. Thank everyone for the feedback on that. That was a fun one. And hopefully we can get more guests over the coming months as well. That's kind of the goal of moving out, is we can diversify and get a lot more people on the channel and, you know, keep taking the content to the next level. So, all right, that's it. Thank you, everybody. Appreciate it. I will see you guys later tonight for Pouncer Weekly. Bye, everyone. Have a great weekend.